the shipping point turns to.
All right, back here. Oh, was that okay, yeah, on, what happened was, yeah, Angie asked a good question. What happened was we bought inventory for 4,500 and then account, so we owed, and we owe 4,500. McGowie makes the correct journal entry. What does it say? FOB what?
Shipping.
FOB shipping point. What that means is, McGowie, what I say FOB meant? What's FOB shipping point mean?
We pay for them.
Let's see how she's doing on it. That's her question. What does FOB? She's from Lima, probably, right? Are you from Lima?
Yes.
See that? Mike knows.
It's
Probably I
when-
should move there.
It's when in this case is when we order some stuff or we bought something, and it's we are being responsible from the freight from shipping point.
True.
From the
That's
shipping
right.
point
That's
to
right.
us.
At the shipping point, the bill, you said very good. The shipping point changed hands at, the bill of sale changed hands at the shipping point. So therefore, we own the freight at the shipper in Chicago. Okay, as soon as it's on the tractor trailer in Chicago, we own it. So we're responsible for the freight.
Okay.
Good, next.
Makes sense. Okay.
Pay freight on April 18th for the purchase.
Paid freight. Let's see if she, so what's the entry? Let's see how she's doing. We'll give her, this will be extra from our sponsor. We'll give her a chance.
That'll be
How much was the freight?
100, right?
Yeah,
Yes.
okay. So what's the entry, do you think? This is for $100 from our sponsors for Miss.
So that'll be freight expense?
Nope.
No.
Inventory. So that was what we were saying earlier. Remember I said outbound expense, freight expense, inbound debit inventory, which has to do with the
Okay,
matching
okay,
principle.
right.
That's what I was saying earlier about the
Right,
matching
right.
principle. See, here, we don't have revenue, so we can't have an expense. And logically speaking, when you, Angie, if you own when you own a business and you're buying inventory, actually the cost of inventory could be viewed, I'm sorry, the cost of freight could be viewed as a part of the cost of the inventory. Okay? It'll become an expense when we sell it, called cost of goods sold. Okay, post to your T account, so now she does the correct journal entry there. Just indent the cash though on the test, okay?
Okay.
Do that right now anyway, just to give you good. It means nothing, and Mike's not the kind of guy to really worry about stuff like that, but just, it looks a little prettier. Okay, and the teacher, they will take you half a point off on you. Okay, so post up to inventory. It's irrelevant, of course, when we're first learning. She credits cash to decrease it, and she posts now to inventory. She's doing an excellent job. Really great job today. Okay, next.
Sold merchandise for cash, 6,400.
Okay, so merchandise for cash, 6,400, and they're probably gonna tell us what it costed us.
The merchandise sold had a cost of 5,120.
Okay, so now we have to do that journal entry A and B. Remember back from 2A and 2B, so do that.
Okay, sold merchandise for cash.
We sold this time it's for cash though, not a receivable.
Right.
It's the
so-
same A and B. So whenever we sell something, Angie, we have to commit to memory the journal entry A and B.
So it's cash. How much was it? I'm sorry.
6,400.
6,400.
So merchandise for cash, 6,400.
So we received them for 6,400.
And then we're decreasing what? Inventory?
We are, in entry 2, that's right. In entry A though, Angie, first we recognize cash received, we recognize the revenue, that's wrong. We recognize sales, it's sales.
Only sales.
Yes, sales. You see the entry 2A and 2B? You see we have sales and account receivable, don't we, in entry A?
Yes.
So the entry B, we have the inventory. So in entry A, we have cash 6,400 and revenue 6,400. because revenue increased because we sold something, we performed a service.
Okay.
Okay, then entry B, we recognize cost of goods sold expense. Oh, she's gonna post that up first, go ahead. She posts up cash, 6,400. And the great thing is I could work the camera. We're ready up here on 11A already. And she then posts up to revenue on page 3 in the income statement page. Beautiful. Okay. Now, entry 2B, entry B here, we're going to recognize the cost of goods sold expense.
Yeah, the merchandise sold had a cost of 5,120.
Okay, 5120 for cost of goods sold. Cost of goods sold expense. Expense carries on the, what side, Angie? On the debit side, that's right, on the left side, on the SKU editor side.
5,120 was it?
Yes.
That's right. And the other account involved expense means to use an asset, and the asset we're using, McGowie, is what? The asset we're using is what?
Inventory.
Inventory. That's right, inventory. So inventory is decreasing. And we'll quote all those, and that whole double A and B, that's entry, all entry 11. You can call it 11A and 11B, or just 11, either way. Okay, she has it nice like that, 11A. So now she goes to 11B, she posts up cost of goods sold expense, 5,200, and now she posts up the inventory. And it's, accounting is an organizational theory, so, and technique. So that's why it is good to put them in T accounts, even though we probably won't make a trial balance with our time constraints, but it should balance, of course. Debit should equal credits. Read to us, Ange, if you're ready. Honey, are you ready? If not, we'll wait till you're ready.
Okay. Okay. Purchase merchandise for cash, 2,300.
Cool. All right, now let's get redundant, but do it first, Ange. Do it first, McGowie. Purchase merchandise for cash. There's one more tricky thing I have to explain, so we're coming up to that soon.
Is inventory increasing?
Inventory's increasing. We bought inventory for cash. Okay. And,
How much was it?
2,300. Cash increasing. Okay. And what's the tricky part?
well, I didn't get to that yet. We have one
Okay.
more little tricky part to deal with before our lesson is over. It has to do with what happens when someone sends us stuff back. What happens when someone sends us stuff back is the last tricky thing that we're going to be dealing with in our lesson. And it was nice that Genesis came out, McGowie's son, and he's up here. He did his homework. He's an internet guy. He likes the internet, so hopefully my website will give him some ideas. There was a story, this girl, she was started an internet business doing hair products. She was 13 years old. She found some stuff to make the hair better, softer, and she started selling it on the internet. And her mom didn't even know about it. She was making all this money, and then her mom found out that she owned this corporation
Wow.
that was making
Unbelievable.
a lot of money.
Yeah, I think it was in California, right, or something.
I'm not
like that,
sure.
yeah.
So we'll give Genesis some ideas. Okie dokie. Be
Okay,
right back.
Pay